Morning, thank you for joining us. This is the first of a number of podcast and YouTube social media bits that I'm going to be doing with local business owners and people as part of the local community. Today's first episode is regarding mortgages. I'm an estate agent, and a big part of what happens to the property market obviously ties in with the mortgage market. And I've got today Ross from Mortgage Evolution over in Chislehurst. Ross, do you want to introduce yourself?
I think you did a pretty good job. But yeah, I'm Ross. I'm from Mortgage Evolution in Chislehurst. We are an independent brokerage. We've been going for about 6 years now, and we are your go-to for kind of any kind of property finance, so residential, commercial, buy-to-let, portfolio bridging. We do all of that. So anything you need in that field, please feel free to give us a call. Our link is on your website, Kevin.
Perfect. Ross, mortgage market at the moment, challenging times in many ways. You're the expert. Tell me what's going on.
Yeah, so good start to the year. Rates have slowly been coming down. Obviously, it's not a constant trajectory, but over about the last 18 months, rates have been coming down. And we were looking at rates. The best rate I saw for a kind of standard residential was about 3.5, just above 3.55, around about there. And then with all of the events in the Middle East, shall we say, we've seen a sudden shift in rates going upwards. This has happened quite quickly. We've seen lenders move very quickly to do multiple rate rises, smaller rate rises, but quite a few of them in a row. For example, Halifax have raised their rates 6 times, say this month. We're still in March, which is
within the month. Sorry.
Yeah, it's fairly unheard of. So yes, it's been a bit of a shock to the market. Markets don't like uncertainty, and that has caused rates to go up quite quickly over the last sort of three or 4 weeks.
And this is universally, whether you're a first-time buyer, you're already got a mortgage, you're a buy-to-let landlord, whatever your circumstances, rates are up.
Yes, absolutely. Unfortunately, to give you an example, I spoke to a client on Wednesday, so that would be the 25th. I'd previously done his agreement in principle on the 4th. He'd gone out to look at properties. I'd quoted him a 3.75 3 weeks ago, and the best deal on the market as we sit here for his circumstances today is a 4.67. So it's gone up nearly 1% in those 3 weeks.
And as we mentioned before we started filming, that in our part of the world could translate to a couple of £100 a month on your average.
Yeah, definitely. So for that particular client, it'll be 3 figures a month that he's looking at an increase in that 3 weeks for if he'd have put an application in 3 weeks ago. Obviously, I'm not saying anything about him. He was just looking for a property. But if he had been able to put an application in 3 weeks ago, he'd have got probably £100+ a month saving, which he'll now not get. And the conversation then with him is that he's then going to have to adjust what he's looking to do in terms of property price to suit what the monthly payments are.
Yeah, so instead of looking up to 500, for example, he might now decide his budget is 475, and he's looking to even make an offer on that of maybe 460 something.
Exactly that. Yeah.
Yeah, I mean, in the space of 3 weeks, that is quite staggering.
Yeah, absolutely. It's not a common thing in the market that we have this happen so quickly, but lenders are very reactive to the change in markets and the swap rates. Excuse me, and they've had to be because it's been a big shock to the market. Obviously, oil goes up, everything goes up. Petrol goes up, everything goes up, and inflation's a worry now.
Yeah, I mean, it's quite frightening to think that something going on in the other side of the world that isn't actually directly linked in any way to property can have such a when Northern Rock collapsed, for example, a mortgage company collapses, it's natural the other mortgage companies will panic, but something on the far side of the world, you wouldn't imagine it would influence the housing market for mum, dad and a couple of kids who are trying to sell their family house in Chislehurst or Welling or Sidcup.
Exactly that. Yeah, it's been a very busy month because as lenders pull rates, we as brokers are there to try and honour that rate, and it's only secured when application is submitted. So there's been a lot of submitting applications just before rates go up. We normally get either a day or 2 days notice. It depends on the lender. So some lenders will literally say sort of at lunchtime, we're pulling our rates tonight, and it becomes a long day of securing rates and getting applications in to make sure that people are saving money, which is the job we're here. Well, why we do the job.
And you say 3 weeks as well. I mean, you think somebody approaches you and says, Ross, I'm thinking of moving house. Let's talk about my mortgage. You give them a set of numbers. They go out and start looking at property. It's natural that people would look at property for at least 3 weeks. You don't agree a mortgage with you today, go and look at a house tomorrow, offer accepted the following day. People will go out and view properties for 2, 3, 4 successive weekends before they commit to something. Um, and then they come back to you and go, hey, great news, I found somewhere, and everything's changed.
Absolutely. So what we see more and more, people are much more aware of the world now. So a lot of conversations I have initially with people are, hi Ross, I just want to run through my affordability due to my situation. And they might not have even started looking at houses yet. Clients would rather have that conversation. And actually, I'd rather have that conversation than have to say, I'm really sorry, but you've put an offer in for 500,000. You're only affordable for 400,000. Yeah, absolutely. I will speak to people for 6 or 9 months just to keep in touch with them. How's it going? Because circumstances change, or they just can't find the right property. So to have this, as you say, change around or turn around in mortgage rates in 3 weeks is unusual, and it's also very difficult for people who may have been looking for a property since late last year and still haven't found the right place.
Yeah, I mean, I said to you when we first met that when I started as an estate agent 20 odd years ago, people would come to you to look at property, and then once they found somewhere, they'd say, oh, I better get my finance sorted now. And the finance was very much a secondary thought because it was so easy to get a mortgage. You had self-cert mortgage where people just said, oh, I earn this much, here's my bank statement. And that was it. They were approved. It was quite frightening, really. Whereas now it's the other way around, isn't it? They come to you first, get all their numbers, they have confidence in you, and the numbers you've given them are factual, but they're only factual at that time. And 3 weeks down the line, let's say, for everything to change so quickly is a bit of a worry. So let's talk about second-time buyers. The first-time buyers at the moment, in my experience, in my part of the world, they've really, really dried up. Getting rid of a flat at the moment is a real challenge. First-time buyers are staying at home with mum and dad because the mortgage has gone up, the gas bill's gone up, petrol's gone up, everything's gone up. So they're staying at home with mum and dad a little bit longer. Landlords are exiting, so the buy-to-let market is a little bit more challenging. At the moment, most people I'm dealing with are second-time buyers, people that are selling a 2 or a 3 bed terrace to upgrade to a 4 bed semi, those kind of people. Is it a good time to upgrade, do you think, Ross?
So from a mortgage point of view, rates have gone up, but what that does do, and I'm going to push this question back onto you, Kevin, sorry. What it does do is it does create deals in the market where people
I know what's coming. Yeah.
There gets to a point for some people where they have to move. They've got a bigger family or circumstances have changed, whatever that might be, and that creates properties on the market that are at a good price, I guess. You'd know that better than me. So from that point of view, yeah, absolutely. And the other thing is that just because rates are up today doesn't mean they're going to stay up. There's no crystal ball. That's the hardest part of the job, right? We don't know what's going to happen, and because we didn't know Iran was going to happen, the advice we gave a month ago is probably not absolutely spot on because of circumstances have changed. However, once people lock in and get a rate, if it's at this rate it is now, if that rate goes down, we can apply for that before they move in, normally up to sort of a month or so before they complete on a house.
Well, that's one of the questions I'll come to with you at the end about why people should be speaking to somebody like you. So, yeah, if you want my view on that question, we had an example before the call, didn't we? So if I go back to just after COVID, you've got the stamp duty holiday, low interest rates, historically low interest rates. We had a house in the heart of Welling, right next to a grammar school, that was on the market for 500,000, and we probably had about 30 or 35 people view that over the course of 2 weekends, and it resulted in a bidding war. And I believe it's going back a few years now, but I believe that we had multiple offers in excess of 520, and it ended up selling for about 530, give or take, a few quid. And your mortgage rate was very, very low, which was great, but you were ultimately paying £30,000 extra for that property. Whereas now, that house that's on the market, or a house that's on the market at 500,000, you might be able to make an offer at 480, 485, and that could be acceptable. So whilst you're paying a bit more on your mortgage, you can potentially negotiate to a higher extreme. And they are the complete polar opposite of each other, the market after COVID and the market now. But in that particular example, you'd be picking a house up £50,000 cheaper. Yes, your repayments would be higher, but you would be paying £50,000 less for a very, very similar property. And the reason I mention about the second time buyers is that first time buyers can wait. If you say to your mum and dad, I really want to move out, but it's a bit of a challenging time at the minute. I'll put it on hold till next year, kind of thing. If you're already on the mortgage ladder, mum and dad with a kid, and baby number two is on the way, you have to move.
Yeah.
And if you've got a new job at the other end of the country, you have to move. So if you're in a position where you can't delay until next year and you have to make that move now, my view is that upgrading is good, because you might sell your property for 5 or 10% less than you would expect. But if you can get 5 or 10% off of the next one, which is at a higher price, then obviously the actual finance in your pocket is a larger amount of money. 10% on 500, guess what? 10% on 700 is more cash in your pocket. So, yeah, it's not all doom and gloom from that point of view. If you are thinking of upgrading, have the conversation.
Absolutely. And it's relative as well, in the sense of we had really, really low mortgage rates in the ones during COVID, of course. But then with the Liz Truss situation in 2022, rates shot up above 6%. We're still looking below 5 as it stands. So relative to that, that is not too bad. Relative to where it was a month ago, it's not great. But where it is relative to where it was 18 months ago, we're still better off at the moment.
Yeah.
So there's never a perfect time. In the time it takes for you to wait for a rate that you're happy with, you might have bought a new place, got a good deal, and paid off a bit of equity. So there's never a perfect time. It's always worth having the conversation, as you say.
Absolutely. What do you think is going to happen over the next 6 months?
It's a really good question, Kevin. It's very difficult to know because of what's going on in Iran. Where we were a month ago, we wouldn't have put ourselves in this position today because we didn't know what was going on. The original information we were sort of given at the beginning of the year was it was likely that the Bank of England base rate was going to go down maybe twice this year.
Yeah.
That has probably flipped on its head now. And whilst at the moment there's no sign of them increasing rates, that is more on the agenda than it was, as I say, 4-6 weeks ago. So at the moment, it's a very mixed picture. A lot depends on what goes on in the Middle East and whether it's a protracted, ongoing conflict or whether it becomes something that's quite quick and is resolved in the near future.
So the honest answer is you don't know. Pick the phone up.
Yeah, do you know what? Yeah, the market is so sensitive to so many things now. Again, we were talking before the call that you'd never know that something, the butterfly effect of something happening in the Middle East would make yours and my job have to move quite quickly like this because of rates changing and circumstances changing. So very difficult to know what goes in 6 months because we didn't even know what was going to go on this month 4 weeks ago.
Yeah, exactly. But I think the larger point that we're making there is that, and I look back to a conversation I had, a very brief conversation with somebody that hung up on me about 10 years ago, where I rang up to ask him about his house, and he said, I'm not moving, and he's trying to put the phone down. And it's like, well, just because you're not moving house doesn't mean that you shouldn't want to have a dialogue with an estate agent and with somebody like you. And he then made a follow-up comment saying, oh, well, I'll speak to my financial advisor. Okay, you've got a financial advisor, fantastic. But guess what? Your biggest asset is probably your house. And I'm an estate agent. Join the dots. It's worth talking to people. It's the only way that you gain knowledge. And if you and I can't predict what's going to happen in the next 6 months, I'm pretty sure the majority of the residents in our little area that we cover are not going to be able to predict it either. So yeah, pick the phone up if you've got a mortgage. Pick the phone up and chat, because who knows? Who knows what the future might bring?
Absolutely. Just with remortgages, Kevin, just to move on to that just very quickly, that it's a
Yes,
very
good,
interesting
good point.
conversation at the moment, because people that are coming off of 5-year fixes are the last of the kind of COVID rates where they were
Yeah,
getting 1 point something. So actually, in that regard, we're giving them bad news because it's going up, to the 4% somethings.
maybe they need to
And
move house.
but the 2-year fixes are coming off of higher rates where they were at that point. So actually, it's a good news for the 2-year fixes. They're coming down, and the 5
Interesting.
years are coming
Okay.
up. So um,
So
yeah,
the first question you're asking really is, okay, you need to remortgage. When did you take your last one out?
absolutely, yeah,
Because whenever that
absolutely,
last one was implemented, the conversation you're having could go in a very different direction.
exactly that. And actually, you can work out when people fixed in based on what they tell you their rate is. If it's a 1.8, then that was a 2021, and if it's like a 5 point something, then that's most likely a 2024. So yeah.
Yeah, I mean, you think, I mean, I live in a reasonably expensive part of the world in comparison to, if there's anyone up north watching this, for example. Um, but, in my part of the world, you buy a 3-bed semi for 450 to 500, depending on what road it's on and condition and stuff like that. The people that are prime central London, where, you're buying properties in, zone one, zone two of London, the difference between a one point something percent mortgage and a 4 point something percent mortgage is potentially thousands of pounds a month. It's staggering.
Yeah.
And then last question, so bit of a sales pitch opportunity for you here, Ross. Let's not lie. I remember, and I'd never thought of this, and so I've been an agent for 20 years. I'd never thought of this until you said it. And if I'd heard it before, which I'm sure I must have, it had gone in one ear and out the other. So, last question I've got is, why should somebody be talking to an independent broker like you and not just talking to their bank? And hopefully you can remember the excellent advice that you gave me.
No, I've completely forgotten it. Essentially, now is a particularly good time to talk to a broker. Obviously, I'm here to sell myself, but now is really important because things are changing so fast. One of the things that I had speaking to a client 10 days ago was, I want to speak to my lender. I've got an appointment booked this weekend, and this is Monday. Well, that lender put up their rates on the Wednesday quite considerably. So first of all, we are very responsive. It's good to speak to us. And whilst we're here to give good advice, sometimes the advice is we need to move quite quickly. We're here for customer service and we want to get the right deal. At the moment, things are going up and we want to get it done quite quickly, so we can turn things around very quickly. Secondly, the point that you were making was that just because rates are up doesn't mean they're going to stay up. So if you put a mortgage in today at a 5% rate with Barclays, just for example, and Barclays drop their rate to 4.8 in 4 weeks' time, if you go direct to them, they're not telling you that. Lenders do not tell you they're putting their rates down or up as a consumer, but they will.
Can I just elaborate on that? Sorry to interject, but the logic behind that, I'm thinking, and tell me if I'm wrong, is that they've agreed a 5% rate with you. Why are they going to call you a month later and say, hey, Mr. Smith, just calling you to let you know that we're going to save you some money? Because ultimately, if they're saving you some money, Barclays are out of pocket. They're not going to call you and shoot themselves in the foot financially, whereas you would make that call.
Absolutely. So we are informed by the lenders every time they put their rates up or down. So
Because
if we
they're
speak
not
to you,
just referencing Mr. Smith, they're informing you to reference the whole market, but then you can pick the phone up to Mr. Smith and go, hey, Barclays aren't going to tell you this directly, but hush, hush, wink, wink, I can get you
absolutely.
that.
So they don't tell us for the reason you just, or they don't tell consumers for the reason you just said. But the other thing is that from a financial point of view, they've bought that money at a certain cost to lend to you,
Okay.
and they obviously have got a margin to make. So they're not going to tell everyone. The other thing being, we're talking lenders who do thousands of mortgage transactions every day, but they have to tell us because Mr. Jones, who's not yet put his application in, I've told Mr. Jones he's getting 5%. If they're going up to 5.2, they've got to tell me so that I can give Mr. Jones the right advice, which would be to get his application in before the rate goes up.
Yeah.
So yes, we will keep an eye as part of the service. We'll keep an eye on rates, and if your mortgage goes down before, it's normally 2 weeks to a month before you complete or exchange contracts, then we can reapply. There is a sort of a small risk with that, is that if your circumstances have changed, you could lose your mortgage product.
Mm-hmm.
But we'll always ask that question. We're not just going to willy-nilly reapply for stuff for you. So we'll have that conversation with you as a client before we'd make any changes, and just say, look, if you go for this from 5% to 4.8, whatever it might be, that's going to save you £50 a month. That's not tax. That's free money that you can spend on whatever it is you want to spend it on. And that £600 a year over a 5-year fix, that's £3,000.
Yeah. So, in short, if you're speaking to Barclays directly, not only are they only going to quote you Barclays products, whereas you will quote the whole market.
Absolutely.
But also, if during the transaction process, which can be, I mean, I had a transaction that completed last month that had been going for 11 months. That's a long time, and a lot can change. If you're talking to someone like yourself and the goalposts do move and it's financially in the benefit of Mr. Smith, you're going to inform them, whereas the lender directly will not. So therefore, the chance of them saving money by coming to you rather than going to their bank is far greater.
Absolutely that. The other thing for us is, we know the criteria for the lenders. We're here to find the best lender for you and your criteria, whatever for your situation, whatever that might be. So just because you banked with Santander for the last 20 years doesn't necessarily mean that they will accept you, because you might have something that's outside of their criteria. So it's always worth talking to a broker first. Okay.
Yeah, just like your car insurance, most people go compare or whatever. Yeah, you don't just bring one insurance company and say yes. So, or viewing houses, you don't just look at one house and buy it. You look at a selection. So why not do the same with the mortgage?
Exactly. There's no reward to loyalty anymore, unfortunately. So you don't. There's a very few occasions where I bank with X lender, will they give me a discount? Unless you're in a very select, you pay for an account or whatever, and that's only with a few lenders. There's no reward to loyalty. You're better off shopping around. Good
advice. One thing we haven't mentioned, so my sales pitch on your behalf, is this man is incredibly knowledgeable, and he's also a really, really lovely guy. So if you do need any mortgage advice and you've listened to the majority of this or seen any of the clips that we're going to put out on social media, don't hesitate to pick the phone up to Ross. I'm sure he'll do his very, very best to help you. And ultimately, he'll be working hard to try and save you some money. And he's self-employed, I'm self-employed. One thing I have learned since COVID is a lot more people are looking to try and support the little guy, as it were. So yeah, we'll always welcome a conversation, whatever your circumstances. Please do get in touch. Ross, social media, do you know all your... I feel like
so we've got our website.
The links down below. Should we do that?
Yeah.
Subscribe, comment.
Do the links below, and also we're linked on your website as well, so you can find us there, or just Google Mortgage Evolution. You'll find us.
Perfect. Really appreciate your time, mate, and
thank you very much.
Look forward. We're doing this monthly. If you've got any questions, put them in the comments down below, and we will try and get them covered on the next one. And yeah, thank you again for your time, Ross.
Thank you. Hopefully next month's not quite so up. Yeah, it's interesting. Let's put it that way.
All right. Take care, mate.
Thanks, Kevin. Cheers.